Hi guys, welcome back. Today we're going to start off with a new topic, interesting one for CA final students. If you are watching the classes in the order, whether offline or recording, all the topics we have taken so far, sir, internal personal, sir, inter I studied, sir, PP, inventory I studied, sir, inter, here and there some changes. Today's topic and the next 2-3 topics that we are going to have are going to be topics that mostly you are studying for the first time. Okay. Today we are going to see not a simple standard, but an interesting one, IND 36, which talks about impairment of assets. Mostly the students over here offline, all of you are studying for the first time, correct? Because your inter was not there. But we will have some recording students who have studied inter in the new syllabus. CA inter new syllabus, if you studied, there it would have been AS 28 you would have studied. Anybody from new syllabus over here in inter? Recording, we have a few students who have just finished and joining, so they will get familiar with the standard, but still there is a lot of difference between inter and final for this standard. So first time in our CA final class we are learning a topic which is exclusive and new in CA final. Same 5-step approach what we do in every standard. Why we have this standard? That structure, mind mapping, concepts, sums, lastly summary we are yet to do for any standard, and ending we will do that. Okay. Now why do we have this standard? Let's take an example. Kaushik purchased iPhone 16. iPhone 16 ko iPhone 15 can difference. Perisa, there is not much difference, guys. Most of you who follow tech will know it's the same phone, just redesigned, all advertisements, all of that. So let's say Kaushik purchased iPhone 16 in the month of let's say June 2025. He purchased iPhone 16, guys. And let's say he purchased it for 1,50,000 rupees. He purchased the high-end model. High-end. There are much more high-end versions. Okay, let's say 1,50,000 after all discounts, whatever. iPhone 17 will come in which month? September 2025. Every September, October is when Apple releases the new phones. Okay. Now, iPhone 17 came in September 2025. That also is 1,50,000. Okay. What changed from iPhone 16 to 17? Can you guess? No change. That number changed. Then here and there maybe they changed something. There are talks that lot of new features will come, like one of the iPhones will not have any port. Full phone will be wireless. You can't connect anything. Okay, that is one change. But you tell me, you can't blame Apple actually. What can they do? Yes, Shiva. That's it, all the features are there. You have to wait another generation or another 5 years to see transformative changes. That's why they also don't have anything much to change. Leave all of that. That time also phone is 1,50,000. Okay. Kaushik could have waited, no sir. June, July, August, 3 months. If he waited, he could have purchased the new phone. But he couldn't wait. So he purchased the phone. Now, imagine Kaushik is preparing his balance sheet. In that balance sheet, iPhone is an asset or expense to P&L? Asset. 1,50,000 I am paying, guys. Asset, I will capitalize it. 1,50,000. I will depreciate it approximate what rate? 5%? No. 20, 25, 30% I can depreciate. So let's say he is depreciating at 20%. Example, my rate can be wrong, 20%. In September, what is the value of this phone? Now it is 1,50,000. In June, I am in June. In 3 months, what will be the value of this phone, old phone? It will be 1,50,000 into 20% depreciation into 3 by 12 should be reduced, correct? How much is that? 1,50,000 into 20% will be 30,000, but into 3 by 12 will be how much? 7,500 only, sir, depreciation. So his phone will become 1,42,500 roughly, guys, roughly. Okay. Now only simple question for you. When iPhone 17 comes, the new phone in the market is available for 1,50,000. Ade phone, new number, here and there some features will change. The camera placement they will change if they change, all of that. Color matirpa, all of that. Now Kaushik wants to sell his phone. Ayo, 17 came out. I want to buy 17. I want to be in the latest trend always. In his balance sheet, Kaushik's balance sheet, phone is 1,42,500. If he sells today, how much he will get? How much he will get? Will he get 1,42,500? Okay, will he get 1 lakh 30? Will somebody buy? Will he get at least 1 lakh? Doubtful. A 3 months old only, sir. No, it's a 1 year old model according to market. How much he might get? 75,000. Okay, people can buy. Second hand phone only 3 months. Kaushik Persa photo edukla. Selfie also he didn't take, nothing he took. Only calls, WhatsApp, Instagram. Still 75,000 only people will be ready to buy. Correct? Will anybody pay more, guys? No. So now in his books, can he continue to show the iPhone 16 even if he is not going to sell? Even if he is not going to buy iPhone 17, he is going to use this only for the next 3 years, hopefully. Can he show the phone in his balance sheet at 1,42,500? No, it doesn't give a true and fair view. The value of the phone has fallen, but a beyond reasonable fall. You will think the fall should be, if I put a graph, it should be like this, but it's a sudden dip. It's a dip beyond an expectation. So why this fall has happened? Because of a new technological model. The minute iPhone 18 comes, 17 and all the previous models will fall. If iPhone 17 comes, not only 16 iPhone, 15 also will drop. If you see, every time a new iPhone comes, previous all models price will drop. Only they itself will give discount and existing models will drop. This is a classic example of impairment. Impairment means the term might be fancy. Basically, sudden value decline. My asset has suddenly declined in value. I cannot continue to show the value in my books at 1,42,000. Now it has become how much? 75. In 1 year, I will write off 75,000. My value of asset in the books from 1,42,500 will become 75,000 in one entry. I will debit my P&L for this 1,42,500 minus 75. How much is that, guys? 60? 67,500 P&L debit panni. I will credit PP or iPhone. Are you following, guys? That's all. Impairment means that's all. This only is impairment, guys. This whole standard talks about one asset suddenly falls value. How do I account for it? This is the background as to the standard. Why do we have it? Sir, why we have this standard? Now you got the clarity. If this standard is not there, you will continue to show iPhone in the books at 1,42,500, which is not true and fair. This example for iPhone correlate with any other PP. Are you following, guys? So with this, why we have the standard is then first thing. Second is the structure of the standard. Sir, what are we going to learn, sir? I am again telling you, this part of structure is not all concepts put in one flow chart and wasting our time. In simple, what are the core concepts? I have to learn about what is impairment for an asset. For an asset, not for an iPhone. What is impairment for an iPhone or any asset? And the standard also introduces a new term. I don't want to dwell upon it much, but I will just write the term because we are putting the chart. They talk about something called CGU. I will not even tell you the full form now. Impairment for an asset, impairment for a CGU. Similarly, you will learn accounting. Sir, how to do accounting, sir? If impairment happens, you should do accounting. Just know what is accounting, P&L to PP. Like that, accounting for an asset for a CGU. Next, reversal possible. What is reversal? Sir, Kaushik purchases iPhone 16. iPhone 17 came, iPhone 18 came, iPhone 19 came. What is the value of Kaushik's phone now? Still less. Now, Kaushik suddenly one day met Dhoni. Dhoni signed on the back of his iPhone and took a selfie. Now, the value of the phone will increase. Somebody will want to buy that. I will buy that for 3 lakhs, more than the new iPhone. So, reversal. Value can reverse also. Okay, value can reverse. So, how to account for a reversal? Again for an asset, again for a CGU. What is CGU? I am not going to teach now, don't worry. If you want the full form, it's called cash generating unit. Cash generating unit, we will spend hours on that, don't worry. Are you following, guys? Then some other miscellaneous concepts. Whenever I write miscellaneous concepts means any individual small concepts related to other standards. For example, impairment not applicable for the standard, what are the disclosures to be done, all those small concepts. In case of impairment, in case of a consolidation, how we will do impairment, like that some small concepts we have. But the standard structure, one brief or as a teaser or trailer is simple. We are going to learn what is impairment, we are going to learn what is, how do you account for impairment, how you are going to account for reversal. All these three we will learn for asset now, individual asset. Then again all three concepts I will repeat for CGU. With that, once we finish this, 90% of standard is over. Are you following? We will not be discussing about CGU in today's class or this recording. Okay, we will continue and finish off for individual asset. Done, guys. So as discussed, standard as 5-step approach. Why we have standard? Structure is done. That only we are going to see over here. It is basically 4 sides. That's all. This is the summary of all the concepts in the study mat. Okay. Once a standard gets over, if you don't believe me, go read the ICAI study mat for one standard. Go read that. And then if you are making the notes, we will cover only these 4 pages. These are the key points. Okay. Now, if I have to teach this standard in an exam oriented way, in a marathon, we can finish in 30 minutes. What is impairment? How to account for it? How to account for reversal? Fairly simple concepts. There are some formulas. Mug up, go to exam. We are going to do a conceptual learning. This is a regular batch. Okay, full conceptual learning. So we have to now come. We are coming to the first concept. What is impairment? That you already studied. What is impairment? Sudden decline in value of an asset. The term impairment is not defined in the standard as sudden decline. They have defined it with an equation. Impairment and also they have defined with an equation they have defined. Okay. That equation only we are going to understand. It's actually a formula in the book, but it's a very easy formula, but logic is what matters. Okay. Now in the iPhone example, you tell me, you compared what with what? In iPhone example. What you compared with what? Book value with the market value. iPhone was 1,42,500 after depreciation. You compared with the market value, correct? So for me to check if there is an impairment accounting, I will compare with the book value. Book value in Ind AS is called as, what is CV? Carrying value. We call it as carrying value. Nothing but book value, guys, but don't use the term book value. Your normal typical carrying value, balance sheet value. Okay, carrying value. Are you following, guys? Okay, so I will write my carrying value on one side. Let's call it left hand side. Okay, that's it. This is what you will compare with something else. Let's derive the equation. It's a very simple equation. Let's say you are driving a cab, guys. Okay, you have a cab, let's say Ola or Uber. It's a classic example, easy for us to understand. Okay, Ola or Uber, you purchased the car few years back. Today that car's value in your books balance sheet is, let's say, 3,50,000. 2 years, 3 years, 4 years, whatever, I don't care. It's 3,50,000 in your balance sheet. Okay. Now, you will compare this with what? You will compare this with what? Market value. Correct. I will compare this with market value. In Ind AS, this market value is called what? Fair value. In Ind AS, market value is called fair value. So I will straight away compare this with fair value. Today if I sell this car, market is ready to pay me how much? Let's say 2,70,000. Okay. That means in my books I am showing the Ola cab or whatever, Indica, whatever car or Swift Desire, whatever at 3,50,000. But market is saying, sorry pa, 2,70,000 mela 1 rupees kadikadu. Translation in English, 1 rupees kadikadu means you won't get 1 rupee also. Okay. So 2,70,000 is what you will get. So can I account for impairment of 80,000 rupees? Yes, I can account, but in all cases my market value will be less than my carrying value. Mostly, correct? Now you tell me, you are the Ola cab or Uber cab driver. Okay, you are running that cab. You tell me, are you going to sell? Are you going to sell? Now if I suddenly do impairment in the Ola guy's cab, Oh sir, what sir, you're telling me I'm driver, I'm CA final class. Okay, you're an Ola cab guy with 100 cabs under you. You're managing 100 cabs, vechkonga. You have 100 cabs worth 3,50,000 book value. Each cab value is 2,70,000. Now, can I do impairment? 100 cars into 80,000 per car, the decrease. 8 lakhs debit paranga P&L. Will you agree? Why? Why you won't agree? You are not going to sell. Your intention is not going to sell. Why should I bother about the market value, fair value today? I am going to continue running these cabs. Okay, very valid point. How many years? How many years are these 100 cars? I am doing for one car, but example 100 cars. How many years are you going to continue using these cars? Anybody? Swati, tell me. How many years it will continue? Another 5 years. Let's say another 5 years. Okay. So another 5 years I am going to use this car, sir. Using this car for another 5 years, will you earn something? Yes. Year 1, year 2, year 3, year 4, year 5. How much you will earn each year by driving an Uber or Ola cab? Have you ever computed how much a cab driver can earn? I have computed because every day I give a lot of, I come in cab only guys. I have car in the house, but I hardly use it. I come in cab only. Today also I thought, okay, fine, we'll come in car. I was ready. I was about to leave, it started raining. Ayo, car, fine, I'll book the cab. Cab came comfortably. I just slept in the car and came. Okay. Now, how much he will earn? Let's say today, in a day, they will easily make around, I don't know if it's correct guys, don't blame me if I'm wrong, but roughly 2,000 rupees in a day, if they're able to make. Easy. See, for me now, a 20 minutes trip from my house to here, 25 minutes waiting, I always make them wait. After they come only, I will come down. So let's say 30 minutes for me, I paid 250 rupees. Okay, 30 minutes. In a day, 10 hours, how much they will get? 250 rupees is for a 30 minutes trip guys, for example. So 1 hour means it is 500. So 10 hours into 500. 5,000 rupees will be revenue in a day if they drive for 10 hours. Reasonable 10 hours. There will again be peak hours, all of that. So 5,000 in a day. Remove the petrol expense, remove the Ola commission, Uber commission. They are left with 2,000 for themselves. Even if they use for 25 days, 5 days leave for them. 50,000 rupees per month. Okay, 50k per month they easily earn for themselves. Okay, into 12 months. 6 lakhs they will take home, CA fresher salary. Okay, easily they will get. Okay, now, so 6 lakhs per month, reasonable number. Okay, then year 2, can I say 7 lakhs, inflation, then 8 lakhs, 9 lakhs, 10 lakhs. That means in 5 years, Swati by using this car, how much cash she will generate? 10 plus 9 plus 8 plus 7 plus 6, how much? Quickly compute without calci guys. 40 lakhs. See, I can do it, but I want the recording fellows to do it mainly. All the recording fellows who are watching the class. See, this equation I can finish in 2 minutes, but I am trying to derive it for you. So Swati is telling, sir, what sir? My car is 3,50,000 book value. If I sell today or say 2,70,000, look at me, 5 years I will use this car. After all the expense, 40 lakhs I will get. What impairment? What impairment? Can I show the car in 40 lakhs in my books? Will you allow? Then don't allow impairment. So Swati is saying no impairment. Now again I am arguing with her. Swati, okay, correct Swati. 40 lakhs is correct. But is this correct 40 lakhs? Why? What is missing in this 5 years data? Present value. Today 6 lakhs is fine, but 10 lakhs after year 5 is not 10 lakhs today. We are all experts in present value. So find the present value of 40 lakhs. What will be present value? Don't compute. Let's say, let me use a good discount rate of 20% guys. High discount rate for risk. Okay, for risk of car accident, this, that, everything. High discount rate, 20 lakhs. At least it will come to 15 lakhs after discounting. I am just doing roughly guys. I am not computing. Correct? So now I am saying, okay, today the car in my books is 3,50,000 carrying value. If I sell today, the fair value is 2,70,000, but my intention is not to sell. My intention is to use for the next 5 years. If I use for next 5 years, the cash I will generate from this asset present value is 15 lakhs, which we just did a rough calculation on top. So I am saying this asset is going to give me much more than what it is there in my books. Impairment or not, what? No impairment, nothing. Are you following, guys? No impairment. Sir, if the present value also is less, then we will think about it. Are you following? So in simple, what is the equation of impairment? Follow, guys. What they are saying, impairment loss, the standard straight away starts with that. It says impairment loss is equal to, now I will connect our equation with the numbers, carrying amount, carrying value. In our example, cab was 3,50,000. Look at how 3,50,000 came. Original cost of cab minus accumulated depreciation. Correct? Now you know depreciation because we learnt in PPE standard. Correct? Okay. Minus recoverable amount. New term. You have to compare CV with RV. What is RV? Recoverable amount. What is recoverable amount? Today if you sell the asset, how much you will get? We saw in the example, how much? That is my fair value. That is my, I will come to the technical parts later, but let me take fair value. But am I going to sell? No. Is Swati going to sell, guys? No. Swati is going to use the car for next 5 years. So that present value of the future cash flows technically in this standard is called value in use. How much is that? 15 lakhs. Why is it called value in use? In the asset use panna, what is the value? I will again repeat. If I use this asset for the remaining useful life of the asset, what is the value it can generate for me? Are you getting it, guys? In simple, it is the present value of future cash flows expected to be derived from an asset or CGU. CGU we will leave it. Are you following, guys? Understanding? Now this 3,50,000 with what you have to compare? 2,70,000 or 15 lakhs? Which one? Forget the, I know it, I can see, sir. I can see, sir. Higher is there, sir. What you are asking, sir? No, loose on. Okay. Why higher? Why can't I take lower? You tell me. Okay. Swati has common sense. Huh? Hello? Yes. Swati, yes. Okay. Now, so Swati, if she is going to sell the car today, she will get 2,70,000. If she uses the car, let her not use. Let her appoint one driver. If they use the car, the asset will generate 15 lakhs. So anybody with common sense will sell the car or use the car? Use the car. So the standard says takes higher of those two. Correct? Reasonable assumption. Take the higher. So I will compare 3,50,000 with 15 lakhs. Should I do impairment now? No. So there is a formula. If carrying value is more than recoverable value, you have to do impairment. If carrying value is less than recoverable value, no need to do impairment. Don't mug up this. I don't like this logic. If carrying value is more, recoverable is less, write off. Recoverable is high, sir. No need to do anything. Are you following? Isn't this nothing but just now we finished inventory standard before this. Inventory is nothing but cost or NRV, whichever is less. This is nothing but impairment testing, no? That this is nothing but what? You are computing cost with NRV. NRV only is this fair value here. Both are not the same. I will come to that later. Okay. You are comparing cost and NRV. For a minute, take a pause, guys. Inventory standard. Cost is 100. NRV 130. You evaluate what? 100. We don't do any write-off. Cost is 100 in inventory. NRV is 90. What do you do? Write-off 10. This only we are doing here. This only we are doing here. You are comparing carrying amount and fair value. So then why, sir, in inventory we are not comparing? I am asking you a question. Sir, in inventory also I can compare cost versus NRV or value in use. I can do, no, sir. Whichever is higher. Why I am not doing that? Are you following? See, for car I compared cost with fair value. What we just now did. See, if I write again, for a PPE I am saying compare your cost versus fair value or value in use, whichever is higher. But for an inventory I am saying just compare cost versus NRV, standard also finished. Why not instead of NRV I can do NRV or value in use, whichever is higher? Why I can't do that? Why the standard is not drafted like that? Inventory? Loudly, yes, correct. Exactly. Inventory, my intention is not to use for next 5 years. Inventory, my intention is to sell now as soon as possible. PPE, that is not the intention. PPE, I may have to sell now if the value drops, or I will use for the rest of the useful life. That is why value in use comes here. That is why this standard impairment is not applicable for inventories. Can you see on the left side? I hope my head is not blocking. It's not applicable for inventories. Because in inventories, automatically every year that comparison itself is sufficient. You will do write-off. Again, I don't need impairment. Are you following, guys? So it's impairment of assets. Which asset? All assets except what it's not covering in this. What it's not covering. Other points you will not understand because we have not done deferred tax still, we have not done employee benefits, but inventory we finished, so not applicable there. Are you following, guys? Biological assets will be the next standard we do, so that time you will get clarity. Are you following, guys? Clear? So sir, fine sir, how much ever time you took, you got the logic of the equation. For exam, what should I remember? Impairment is nothing but compare carrying amount with the recoverable amount. Recoverable amount is the higher of fair value or value in use, whichever is higher. What is value in use? Present value of future cash flows from that asset. That's it. We have to do sums, guys. I'm going to do sum only next. Okay. Now, coming to this fair value, what is the difference, sir? Many people use this term very interchangeably. Fair value and NRV. Are they the same? Are they the same, guys? No. They are hugely different. Okay. Let me explain first equation wise what is the difference. See, it is all about mindset. Okay. NRV is, okay, I'll put it this way. Let's go back to the iPhone example. Okay. iPhone example, Kaushik's iPhone. NRV is what you want to get when you sell the asset. Okay, how much are you expecting for the asset? For Kaushik iPhone, if he is selling, he is expecting 1,20,000 rupees, for example. That is from the entity's viewpoint. Fair value is from the market's viewpoint. How much will I pay for Kaushik's iPhone? 1,20,000, 1 lakh. So fair value in simple is what the market is ready to pay for your asset. NRV is what you are expecting, estimated selling price. What you are estimating, you think you will get. Can you look at the difference, guys? Perception only varies. It's only the angle. Okay. For example, you guys will think, ayo, class cancelled 10 days. Sir, mudipada silla time kulla. That is your perception. For me, I am not stressed. We will finish when we finish. Don't have to worry. Perception. So, if you sell an asset, how much you will get? NRV. How much market is ready to pay? Fair value. Are you following, guys? Clear? Understanding, guys? Jamuna, that girl came today. New student. One new student joined class. After cancellation also one student joined yesterday. I thought she will come today. Fees la pay pantang. Okay, she will come maybe tomorrow. Fine. Okay, come back to topic, guys. Fine. Are you understanding, guys? This is logical difference. Equation difference. NRV we already learnt in India is to inventory. What is it? Estimated selling price minus cost of completion minus cost of sale and the brokerage, all of that. Estimated in fair value, that's it, one value. Because what the market is ready to pay will not include brokerage cost, all of that. Correct? See, NRV, if I want to sell, if Kaushik wants to sell, he has to put on OLX. If phone has a crack, he has to repair that crack. Then he has to find an agent. But for a market, he won't see all that. how much is ready to pay? One price. Are you following, guys? Clear? But in this standard, the equation is not just fair value, because you want to sell, so it is fair value less cost to dispose. Simple. Sir, Kaushik found a person to buy the iPhone, but that person is in Delhi. So Kaushik now has to courier that to Delhi. So for him it is 1,20,000 that he is going to get minus cost to dispose, courier charges. Are you following, guys? So I have written over here, this is not the same as NRV. One more thing, usually NRV is computed on what day? Balance sheet date, correct? In this standard, fair value is computed not on balance sheet date. Whenever you are testing for impairment that day, for example iPhone, when iPhone 17 came, I will do impairment for iPhone 16. So impairment is not done on a balance sheet date. Like how every 31st March I will check for revaluation, every 31st March I will do depreciation, every 31st March I will compare cost versus NRV. Impairment, there is no date. Value, when it will drop? Can I tell? Health, every 31st March I will test. Suddenly when you see symptoms, you will test. Are you following? So impairment can happen anytime. Are you following, guys? This is the first part of the standard, the heart of the standard. Rest of the standard revolves around this only. Okay. Now you tell me, before we go to, I am going to go straight away to few sums. In fact, let me go to a few sums for you to get that confidence. See, follow, guys, inter and all, if you see one standard, I will do 10 or 15 sums only, that's it. Here for every standard we have 30 to 40 sums. So we have to be fast. Like I already told you, illustrations and test your knowledge we will do in the class. It will be part of your recordings, those who are watching. The past exam questions, RTP, MTP, separate recordings we will do in the end for everything. We will discuss over there. So now straight away illustration one, this and all will come in exam and all, chanceless case, but just for your quick concept, 30 seconds. The carrying value of the building in the books of Sun Limited as of 31st March is 300. So left hand side will be 300. As on the date, value in uses 250 and the fair value less cost of disposal is 238. Calculate recoverable amount. What is recoverable amount? Higher of what? Value in use or fair value. So higher of 250 or 238, which is higher? 250. So recoverable amount is 250. Answer is, question stops with that. But I am going to add on, is there impairment loss here? Yes. How much? 50. 300 minus 250. Understood? That's it. So in exam, you have to compute, you have to compute 3 terms, guys. Carrying amount, fair value less cost of disposal, value in use. Value in use or fair value less cost of disposal, whichever is higher is my recoverable amount. Compare with carrying value. That's it. Every exam question, I told you 40 sums we have. Predominant of them is to find these 3 values. Either less year 1 la kammi aichu, year 3 la it increased, what to do. That's it. Are you following, guys? Clear? Question 2 we can't do. Okay. Question illustration 3 is a proper illustration to understand the concept in detail. Okay. Simple sum. No here and there detailing, it's a simple sum, guys. Okay, this sum you are going to do it, I am going to help you out. Okay, I want you to put the pen on paper and then we will come back and discuss some notes. Like, sir, எப்போ sir impairment test பண்ணனும்? Meaning, depreciation year ending, revaluation year ending, NRV computation year ending, impairment when should I test? So for that you have some theory, when to test for impairment. Theory part we will come back to it, but this one sum will give you full concept clarity plus exam oriented. Mars Limited gives the following cash flow relating to PPE on 31st March 2024. Discount rate is 15%. Super. They have given year 1, year 2, year 3, year 4 and year 5. 5 years of cash flow is given, correct? And they have given the residual value at the end of 5 years, 500. What to do with all these cash flows? Fine. Present value, cash flow into discount rate. You know what to do. Super, sir. Next, PPE is purchased on 1st April. Beginning. Original cost at 20,000 lakhs. Leave the lakhs aside. I will just take numbers, rupees in lakhs. Okay. Useful life was 8 years. But why cash flow is given only for 5 years, sir? Why we are on which date? 31st March 2024. This is 1st April 2021. That means already 3 years are over. Are you figuring out, guys? See, this is 1st April. That means total 8 years. Now I am in the end of year 3, 21, 22, 22, 23, 23, 24. Correct? So already 3 years over, sir. I am doing this impairment calculation at the end of 3rd year. How many years are left? 5 years are left. Super. Then residual value at the end of 8 years, 500, already given in above table, again repeated. Fair value less cost of disposal he has given as it is. He is asking you to compute impairment loss if any, and also calculate the revised carrying value and revised depreciation after impairment if any. First let me create the structure. Okay, you will do the sum, but I am just giving structure. Okay, totally how many years, guys? 8 years. We are in which year? End of year 3, which in the question is 31st March 2024. Now in the date, in this date they are asking me to test for impairment. Why? We will see theory later, but I am testing. I need to find 3 values. Sum is over if I find those 3. What is that? Carrying value I will compare with my recoverable value. Recoverable value is nothing but the higher of fair value less cost of disposal. Remember, guys, fair value does not include cost of disposal. For this standard we are reducing because intention is to sell. Less cost of disposal compared with value in use. These 3 I have to compute, guys, which is already given in the question. Fair value less cost to disposal 10,000. This question they gave. Okay, so they gave one. So this is 10,000 rupees in lakhs, guys. Original cost I have how much? 20,000 lakhs. I need to find carrying value, and I need to find value in use. Panita, sum is over. Correct? Do you guys want to try that, or should I do that? I will do it, but quickly try it out, guys. These are the values. I am just lighter reducing the screen. Yeah, full question is visible. Recording fellows, try it out. It's okay. 1 minute it will take. Try it out. Then I will solve the full sum. Of course, try it out. Rough working, calci working is enough. Do it. Recording students. This question has come in CA Inter for 5 marks in one of the latest attempts. Same question, copy paste from final book because syllabus is there now in Inter. 5 marks he asked in Inter. For them it will be compulsory question. Ayo impairment. For us it's the intro question. Puntingla ma'am over. Yeah. Not well. I should learn from you. Not well, you are coming to class. If I am not well, I will give leave. Okay. Recording fellows, come on. Done, guys. Try it out. Any one student finishes now, I will proceed. Online also. Recording, don't look at my face. Don't search for fast forward button. Can I start doing it, guys? Okay. It's just basic computation. I will start doing it now. I will use the solution and help you out. Let me do one by one. First I have to do carrying value. Correct? That means I have to do 20,000 is the cost minus depreciation for how many years? 3 years. How do I compute depreciation here? Very simple. 20,000 minus 500 residual value divided by 8 years. Correct? Cost minus residual value divided by useful life. The equation also we derived in which why we have depreciation, all of that. So how much is depreciation per year? How much? 2437 point something into 3 years. How much you are getting? 7312.5. Okay. So what is carrying value now? 20,000 minus 7312.5. I am hearing values here. 687.50 approximate. Correct? Sir, என்ன சார் பண்ணீங்க? ஒண்ணுமே பெருசா பண்ணல. What I did, nothing great. Original cost minus depreciation for 3 years. That only they should have done over here also. If you look at this calculation of carrying value, where is that? எங்க இருக்கு? E 12,687. Here it is. So original cost 20,000 minus depreciation for 3 years 12,687. That's what we got, guys. 12,687.5. They rounded off. So this your answer, sir. Presentation how to do? Your answer should start off with this. Carrying value is this. Recoverable value is this. Fair value is this much. Value is this much. Here I will give working note 1, working note 2. Working note 2 another given. Okay, given. Working note 3. That's it. So example, and I will write here. Impairment loss is equal to, if it comes, so straight away answer supportings below. Okay, now so carrying values, then how do I find value in use? Nothing greater. You will just take all the cash flows, multiply with the present value. They have not given, but you know how to find for. Is it given? No, 15%, and you find the present value at 9513. Do you want me to do this, guys? I can do it. Our recording will become 450 hours. If you're okay, I will do it. What is that? Cash flow into present value. Simple one. All of you are comfortable with this? Hello? Any one student, please tell me, sir, do it. Then I will do it. Okay. You guys are fine and recording will be fine. 9513. Common mistake here students do. Common mistake I will tell you, when they are doing cash flow, they will forget residual value. This table you will not forget because inga kuduthirukam. But in most sums he will not give it here. He will give it only below, but still you have to take residual value that you will get, or the other assumption you can take is this cash flow includes residual value. But in this question our clear kuduthirukam in the table itself, so that is one thing people forget. So your residual value is how much? I mean value 9513. So here I will write 9513. All the values are there. So now I will take whichever is higher. Now this is a case where if I sell the asset today you will get 10,000, but if I use the asset you will get only 9513. That also is an estimate. So better to sell. Somebody with common sense, better to sell instead of using it. Correct? So they are saying residual value will become higher, take 10,000. Getting the logic of why higher, sir? Don't mug up. Somebody with common sense, prudence, they will take 10,000. But still my asset is 12,687. Recoverable value is only 10,000. Therefore impairment losses 2687.5. That only will be here. So look at this. Impairment loss will be carrying amount minus impairment loss. Look at this. Calculation of impairment loss 2687. Are you following, guys? Understanding? So come back over here. We have 12,687 is the asset value before. Now you reduce to 2687 impairment loss. What will be the entry for this? P&L debit to PP. That's it. Debit my P&L, credit my asset. Sudden loss. But this has some changes that we will see later. But I will just give a teaser now. Sir, what if this asset, this is in year 3, what if in year 2 this asset had a revaluation gain? That's why it became high. Then you can't debit P&L. First you have to debit revaluation and then come to this. This we will discuss in detail with an example later. That is the, what to say, the only interesting complex part of the standard is that, sir, year 1 I did upward revaluation, year 2 I did downward revaluation, year 3, year 4 I was silent, year 5 again I did revaluation, year 6 I did impairment, year 7 I did impairment reversal, year 8 I did revaluation. how to do. By end of this standard, you should know. Over 20 years, I did 10 times revaluation, 10 times impairment. I don't care how to account for all of this with depreciation. That understanding, if you get at the end of the standard, we are in the right track. PPE along with the standard. Are you following, guys? That only we have sums. We have very good sums, beautiful sums before we get there. So in this sum, revised carrying value is how much? 10,000. This 10,000 will have remaining useful life of 3 years over. So I have 5 years. Residual value is same 500. No change. This also can change, but here it has not changed. So what is the revised depreciation? Revised depreciation 9,500 divided by 5, how much? 1,000? Flat, 1,900. That's it. That will be a revised depreciation 1,900. Are you guys following? That's it. Simple sum, 5 marks in CA Inter for final, maybe MCQ if you are lucky. Or will all these sums come in exam? I don't know, guys. We have advanced sums, depends on examiner. If he say every exam will have the 20 to 25 marks, easy questions. These things can come. Are you following, guys? This is impairment. With a sum also we have understood, a proper illustration to understand the whole concept of impairment. Are you guys understanding, guys? Now the equation easy. First time learning a new standard, easy. Hello, easy or difficult? That's why they took it to Inter. Easy, no. So they were added in inter syllabus also, okay, for those students. But this and all is fine, guys. You escaped to, there is one standard called employee benefits. If you have studied now, you will know, or your seniors will tell you. That is one crazy standard. Students will get scared. It has so much complications inside. That they took it to Inter, AS 15. They have taken that standard. No students see, they will get scared in Inter, but it's there in final also. Separate standard. Nice standard, we will spend a lot of time, 6-7 hours minimum. Okay. Now, before we halt this discussion, we have to discuss one last thing, so I can then put a halt. We can go for a short break, whatever. When to test for impairment? Okay, sir, when should I test this, sir? Okay, impairment now, see, depreciation happens on a yearly basis. Inventory cost or NRV happens on a yearly basis. Like that, impairment, when should I test? Okay. Should I do on an annual basis? Do you do, simple, do you do a full body blood checkup, full body, head to toe, whatever, all scans, sugar test, every year you will do? No. When you will do? When there are symptoms. Fever came, fever is not going after medication, I took antibiotics, fever is not going, it's coming back, then doctor will write for you. We are all in our 20s, including myself, for still few more months I have left in 20s, okay. Now, so let's say you will, okay, you are in 20s, so you will do blood test only when there are some symptoms. Let's say we are in 50s or 60s. Recommended to do a full body checkup yearly at least once. Correct? Even if nothing is there, yearly once or check panna, it is safe. Nowadays, blood tests, there are so many things. Recently, somebody educated me. There is something called DNA test now. DNA sampling test with blood test, and I didn't know. One person told me, I am also saying, it's very cheap, it seems. DNA sampling test now, they will just trace your DNA and map out your biological history. They will tell, no, my dad had this, so I will also have this. My dad had, let's say, diabetes. For you to, or dad or mom, for you to get diabetes is very easy. Correct? So like that, they will do a DNA mapping or blood test, the DNA mapping, and then they will figure out your ancestrally, what to say, everything. See, for example, I have asthma from birth. Okay. Nothing I could do. I had it from birth. I don't know how it came. From birth it's there. So I am living with asthma now. Okay. But it's fine. Not that severe it is. My son, who's now 2.5 years old, he also has mild wheezing. He also, so that means it's because of, it's going ancestrally, correct? So there's some DNA testing, it seems, which says what are the possible things that you may get, what all you should change, like that. Okay, some test is there. Okay, we'll come back here. So each person, it varies when to do blood test, correct? Like that. Impairment, when should I do? For every asset, okay, for every asset, when should I do? They are saying there are some internal indicators and some external indicators. MCQ theory question or case study based question. When should I test? Annual basis? No. So there are some cases where I should test annually. We will come to that later. Leave that. There are 3 cases. Only in 3 cases I will test it annually. For every other asset, don't worry about impairment only if these things happen. I will give an example. When this, for example, let's say when iPhone 17 comes, you will check impairment for iPhone 16, 15, 14, 13, 12. Correct? That is in external indicators, technological changes. Are you following, guys? Like this, each point, one simple example we will discuss and proceed. So a company should check if this happens. Okay. Economic changes, panna impairment I should do. When I should do impairment? Economic changes means what?
Inflation.
Okay. Externally inflation. Okay. Something more simple. More simple example.
Laws changes.
Okay. I am living in South Korea. Just few days back, if you see last few weeks, South Korea and North Korea started to fight. Everybody is in the fighting mode. Okay. Now, suddenly now there is a war climate in South Korea and North Korea. Leave North Korea, guys. Country's been like the dictatorship for a long time. North Korea backed by Russia, South Korea is backed by US. So North Korea, South Korea fight, now US, Russia fight. Okay. Fine. Okay. Now, so let's say South Korea is a proper developed country. It's a proper developed, all your, what is that? Those movies, K-drama, that Collywood, not Collywood, sorry. Korean. So, okay, Korean. I mean, Collywood copies from Korean only. Okay, so Korean, all that comes from your South Korea. It's a proper developed country. Now, let's say I have a company in South Korea. Now, suddenly war is going to be declared. Now, suddenly I have to check for impairment for all my assets. Because if a war is declared, people may not buy my products. People will stop buying luxury products if war is declared. Correct? So, I am making luxury products. Economically, it has changed. Check for impairment. Or inflation, like how ma'am mentioned. Are you following, guys? Legal changes, no?
Law, like how plastics
Okay.
are banned.
Currently, I am not going to name anybody, but you will figure out. Currently, one company is there because of this government. If this government changes, this company gali. Can you fill the gaps? Are you following, guys? Okay, I am not saying anything, guys. You can fill for gaps, whatever you associate. So, why, sir, government marna legal will change. If government changes, law will change. As long as this government is there, Starlink cannot enter into India. Elon Musk is crying, "Ayo, how to enter into India?" Because government is supporting some other company. You fill the gaps. Suddenly, if government changes, legally it will change. So, if law changes, you will test for impairment. Sir, give me a more easy example. Suddenly, government is coming and saying, cigarettes, tobacco products in India are banned, not allowed. Okay. ITC has to do impairment for such assets. Are you following? Clear? It won't happen, guys. Lot of tax government is getting it. They will not lose that. Okay. Fine. They will only think about what more to do legal instead of making it illegal. So, come back over here. Next, these are some external indicators. I am giving one example per point. Can someone explain? Market interest rate increase significantly. Beautiful point. If you can understand the concept. It's a theory point only, but market interest rate increased. What is this? What is this market rate increase now? Why I should check for him? Perfect. Clap for Kaushik, guys. Everybody, clap for him. Super. So you are comparing carrying value with recoverable value. Recoverable value is the higher of fair value less cost minus. Compared with, not minus. Sorry. Value in use is cash flow into discount rate. Now, if this discount rate increases, present value will fall. If present value falls, then there is a chance for value in use to decrease. If value in use decreases, it might lead to impairment loss. Correct? It might lead to impairment. Are you following, guys? The connection, reverse connection. I will again repeat. See, value in use is depending upon cash flow into discount rate. If discount rate increases, present value will drop. If present value drops, value in use will drop. If value in use will drop, assuming this also is lesser, then recoverable value also will drop. If RV drops, it may lead to impairment loss. So that means discount rate is nothing but culmination of multiple market interest rates. So if market interest rates suddenly increases, inflation goes up, check for impairment. Are you following? What a beautiful point. Are you understanding, guys? Look at the connect. Okay, next, significant fall in market value, iPhone example. Suddenly price dropped. Can you give me other examples apart from iPhone? one product is there, sir, suddenly price decreased. Suddenly price decreased. Some example. Apart from iPhone. Hello? Don't tell Pixel, sir. Yes. Tomato is not an asset, no. Inventory. Inventory not applicable. PlayStation. No. Okay, PlayStation. Once if PS6 comes, PS5 value will drop like that. But tomatoes, yes, no. Because of this rains, everybody bought vegetables. Unfortunately, we were not able to buy, but it was of no use. I mean, no, not near also. Next day was available. Okay. Nalla cash save pandrom. Okay. Fine. Now, internal indicators. Now, whatever we saw here is external. Beyond my control. External, a company can't do anything. Happens na check. Internal is because of me. Sir, tell some internal indicators, sir. iPhone is there. Kaushik kept on his next table. Somebody sat on it. Broke. So, this is external now. Yes. Internal now, Kaushik itself sat on his iPhone. Screen cracked. Okay. Like that, internally what all is there? Asset is damaged. I hope it's, yeah, asset is damaged. Example, Kaushik or obsolescence of assets. You know that better than me. Basically, time over. Life is getting less. Economic performance of asset is worse. Sir, I purchased Ola Electric thinking I will get mileage, whatever, how much you will get electric, what is the mileage, guys? 80 to 100, huh? Electric, sure, I don't know, guys. 80, okay, 80 kilometers, sir. Okay, adan promise pananga. I am also writing in green pen, Ola. Okay, Ola Electric I purchased thinking I will get 80 kilometers for one whatever unit of charge or whatever. Paatha, I am getting only 30 kilometers. Petrol bike better. So economic performance of the asset is worse. Ola's service is not good. So I will do internally, I will do some indicators. Okay, for me, for the asset. Okay, adverse effect due to asset is idle. You say pannalo value kammi. Sir, I am not doing anything, sir. I am on a break, sir. 1 year I am sitting in my house, not doing anything. Mind will become what? It will depreciate. It will get impaired. Because you are not learning anything new, correct? Okay. Discontinuing or restructuring of operation, renovation, all of that, discontinuing operation, all of that. Plan to dispose of asset or reassessing useful life. Okay. Plan to dispose as suddenly, let's say, we are shifting our class from here, Nungambakam, to a new premises. I don't want all these ACs. I am going to put centralized AC in the new premises. So all these ACs I am going to sell. Impairment loss. If it is that, are you following, guys? Clear? Understanding? These are just fairly general theory points. Any doubts in this? Hello, internal and external. Any doubts?
Sir, for internal, restructuring of operation will increase the sir?
No, see, internal, I am not saying impairment na it will fall. Here we are doing test for impairment. So if there is going to be a restructuring, check pannunga, is there a decline? That means check means do this computation. If there is no impairment, don't worry. Don't have to do anything. Are you following, guys? So when should I test? When you get hints. Sir, symptom came, sir, fever came. I did all blood tests. Everything is fine. Nothing to worry. You are testing if there is a loss. Nothing is there. Leave it. Are you following, guys? But jokes apart on Ola Electric, that is one company. See, people will show so much hate on people. Who will have more hate? Somebody who is doing well in life, correct? If you take all the people who are doing well in life across the world, they will have hate. Take Elon Musk. He is going in this direction, achieving things. But he has a lot of hate. That means people are jealous. That means this Ola company, electric, Ola founder is doing great things. See, what all he is doing, everything is planning for the future. Correct? All the things. See, why Elon Musk is celebrated in one community? He's recently when Robo Show happened, he showed some robots, he showed some robo taxi. He launched something called Robo Taxi, fully 100% self-driven cab, which is launched by Tesla, which is saying in the next few years, cab will not have any driver. In fact, sir, already sir, self-driving cars has a steering. This car doesn't have a steering. Suppose suddenly software malfunction, you can't open the door also. Okay. So, my car is launching. It is still not launched. But if it comes out well, people want it. I will not take that risk. As long as I am alive, I will not go in a self-driving car. Parvala, na drive பண்ணிட்டு போறேன் or cabல போறேன். I don't want that risk. Especially I saw on Amazon Prime show long back, I think 1 year back. Some upload and சொல்லி one show was there. I watched a lot of shows, guys. This 2 days when I got break, I think 6 movies I saw. 2 TV shows I finished. What else to do in the house? I was seeing Netflix, Prime, what was there? So my son also watched along with me. We saw all the movies. Okay, many movies I saw. So long back I saw this upload one show. That movie is all about hero will be there in my self-driving car lo first episode is accident. Okay, so like that, guys. So I'm saying Bhavish Agarwal of Ola is anticipating a lot of changes. If whatever he promises happens, it's good for our country only. Okay, now come back. That's it. With this we have learned when to test for impairment. I still have to discuss for a few things you have to test on an annual basis. I am not discussing now because that requires a separate 15 minutes discussion where I want to discuss more. So test on annual basis. In the 3 points alone, mandatory every year check pannu. This is like a 60-year-old person. Varsha blood test edukanu guys, mandatory. Standard is mandating for these 3 points, MCQ. If these 3 points come, impairment test every year mandatory. I will just tell the points now because we are seeing it. Why? You think about it, recording students. Next recording you will see goodwill under business combination. Vodafone Idea merged. Adla vara goodwill every year I will check. Intangible assets having indefinite useful life. Intangibles under development. Think about it. Why? Some you may get the answer. I will discuss in the next session. Before I close, any doubts here, guys? Anyone? Fine. Okay. Recording students. See you in the next session. Here we will go for a short break, guys.